Banks make billions doing almost nothing with money that isn't even yours. Are they essential infrastructure or the biggest legal scam in history? Today, we put banking on trial. The case for, the case against, and the one piece of math almost no one explains that changes how you see your bank account forever. First, the case for. Despite the conspiracy headlines, modern life couldn't exist without banks. Here's why. Banks pool small savings into large loans, a factory gets built, a business expands, jobs appear. Economies with developed banking grow 2 to 3 times faster than those without. Before deposit insurance, a single rumor could collapse a bank, and your life savings with it. In most countries today, your deposits are government guaranteed. That's not a small thing. Try buying a home without a mortgage, or starting a business without a credit line. Banks make timing possible, letting you act today on income you'll earn tomorrow. Banks aren't only lenders, they run the payment rails, card networks, wire transfers, bill payments. Every digital purchase you make depends on banking machinery you never think about. But the case against is just as serious because banks don't just store money, they create it. And that's where the real argument begins. Here's the trick almost no one is taught in school. When a bank lends you $100,000, it doesn't withdraw it from a vault. It types it into existence. The loan creates the money. For every $1 a bank holds, regulators often let it lend 10, sometimes more. The other $9 didn't exist a moment ago. Most of the money in your country was created exactly this way. When money is created faster than goods and services, prices rise. That's inflation. And it isn't a tax you vote on. It's a quiet transfer, and from people who save to people who borrow first. On top of money creation, there's the everyday extraction, account fees, overdraft fees, credit card interest at 20%, your savings account pays less than inflation. The spread is the business model. And when it goes wrong, like in 2008, taxpayers get the bill, losses become public, gains stay private. The institutions called too big to fail were the ones that caused the failure. So are banks a scam? To answer that, you have to know what banking even is, because the version we have now isn't the original. For most of history, banks held something real: gold, silver, grain in a warehouse. If you deposited a coin, the bank kept a coin. Lending out more than you held was called fraud. People went to prison for it. Then in 1971, the US broke the final link between dollars and gold. Today, banks can lend 10 times what they hold. The constraint isn't a vault, it's a regulator's spreadsheet. This isn't conspiracy, it's documented banking history. Fractional reserves were once a crime. Today, they're the foundation of the global economy. The job description changed, the name didn't. Which brings us to the answer, and it's not yes or no, it's something more useful. Banks aren't a scam. They're a licensed privilege granted by governments, backed by taxpayers, to a handful of institutions allowed to create money. Calling it a scam misses the point. Calling it a service misses it more. The right question isn't, are banks evil? It's, who should be allowed to create money? Why are private companies answerable to shareholders granted that power? And what would happen if we redesigned it from scratch? Banks are the most powerful businesses on earth because money itself flows through them. The smartest thing you can do isn't to avoid banks, it's to understand exactly what they are so they can't surprise you. What's your take? Foundation of modern life or biggest legal scam in history? Drop a comment. If this changed how you see your bank account, hit subscribe.